Ladies and gentlemen, good day and welcome to Q1 FY23 results conference call of Mitsu Chem Plast Limited, hosted by Kiran Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be no opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sumit Maru from Kiran Advisors Private Limited. Thank you and over to you, sir.
Yeah, thank you. Good afternoon, everyone. I would like to welcome Mr. Manish Tedia, Joint Managing Director and CFO of Mitsu Chem Plast Limited, and Ms. Kashmira Dedia, Vice President, Finance and Accounts. Manish sir, over to you.
Thank you. Thank you, Mr. Maru. Good afternoon, everyone. I welcome all of you for the conference of Mitsu Chem Plast. Mitsu Chem Plast for the first quarter of FY23. FY23 started on a very positive note. We have witnessed 42% top line and 40% bottom line growth. This indicates that the opening of economics has pulled demand back to pre-pandemic levels, and the packaging industry is gaining momentum. Raw material prices are still high, and that has kept our operating margin slightly under pressure. But as mentioned in our Q4 FY22 Concall, our strategies are in a place and we are keenly focusing on our operational efficiencies. This resulted in 23% rise in EBITDA for the reported quarter. Our key raw material, polythene and polypropylene, is a crude-based product. As we are seeing correction in crude prices, we feel the negative impact to be bottomed out in coming quarters. We are quite hopeful of the same. Talking from a future perspective, we see good traction in demand with geopolitical issues. Product innovation and value engineering continues to be our focus to enhance product portfolio and product quality. Strategies for the year are increase the product basket, addition of new clients, increase regional reach and offer more customized product. The demand is growing and with our strategies in place, we are poised to grow at a comparatively higher rate. Your company, a leading manufacturer with more than 500 plus SKUs, is serving over 30 plus Fortune Indian 500 clients in India. Mitsu Chem Plast stood strong against the pandemic threat and continued its right march towards growth. I thank you all for your support and the faith in the company, which would drive us towards new milestone achievement. Now I hand over the floor to Ms. Kashmira Dedia to discuss the financial performance during Q1 FY23.
Good afternoon to you all. Now I will take you through the financial performance of the company Q1 FY23. Your company witnessed strong demand growth in reported quarter. Financial performance for first quarter FY23. Mitsu Chem Plast total income for first quarter FY23 registered robust 42% growth to rupees 84.69 crores. Molded industrial packaging contributed approximately 81% to the total revenue, while furniture products like hospital furniture parts contributed approximately 9.5%. Infrastructure furniture and other products contributed approximately 9.5% to total revenue. EBITDA improved by 23% to rupees 9.4 crore, while net profit grew by 40% to rupees 5.16 crore. EBITDA margin was at 11.12% and net profit margin was at 6.09%. EPS at 4.27 against rupees 3.06, up by 39.54%. Thank you. Now I open the floor for question and answer.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Manan Poladia from MKP Securities. Please go ahead.
Hello, sir. Congratulations on a great set of numbers. So I've noticed in the investor presentation this time you manage the auto parts that you're talking about manufacturing. I would like to know whether the new FPO that you've launched and outside of the funds that you're going to use to repay your debt as well as the working capital requirements, will any of that money go towards the capex for this?
Sorry, sir. Capex for this means?
Capex for the auto parts, or do you already have those capacities inbuilt?
No. So I think we are open to that for automotive industry as well. Right now, from last 2 years, company is not doing much in automotive. But yes, we have some negotiations on with some companies, and we might come up with that automotive product. So if something comes up, yes, we are ready for that.
Okay, sir. Thank you. Also, in your RHP somewhere, I noticed that you mentioned that you want to put in an FMCG plant from the additional proceeds of the FPO. Would you be able to give us some color on that? What segment would you be venturing into?
FMCG means? I don't think so.
I think you mentioned FMCG or paints.
Yeah. Paints. Yeah. So we are coming up with the various injection molded products also. So the pale is one of the product, and that we will come up with that. So I think we'll announce very soon on that.
And what would be the sort of margins that you would be targeting in the paint pails?
So right now, almost similar margins. We are, a little better than what we are having right now. So initially, the margin will be little lesser because there will be many trials and all these things. But yes, in the future, we are expecting good margins in the pails also.
Right, sir. Thank you. Also, one last question. Would you be able to give us some color on when the FPO is supposed to open to the public?
I mean, like as soon as we get SEBI approval, we will come up with the FPO soon. So it's already
There's no timeline on that as of yet?
Sorry?
There's no specified timeline on that as of yet?
It's in a SEBI's head.
Okay. Perfect. Thank you, sir.
Yeah. Okay. Thank you.
Thank you. The next question is from the line of Narit from TSG Capital. Please go ahead.
Good afternoon, sir, and congratulations on a wonderful set of numbers. And I love that we had spoken in the last quarter as well about the margins being maintained, and you went through with that. So great to see that.
Thank you very much. Thank you very much for this.
So my first question was, can you give me some idea on the number of clients we have added this quarter, or the number of clients in the last quarter versus this quarter?
So approximately new clients added is around 25 plus clients we have added this quarter.
And from which industry are they? Can you give me an...
So mostly from mostly from a chemical and pharmaceutical industry only. So packaging business only we have added some new clients.
All right. And can you give me some idea on what is the volume growth versus the price growth for this quarter? Because I think the prices have gone down, so there must be a good amount of volume growth.
Yes. No. So I think there is a little change. I mean, prices has increased drastically in last 2 quarters. So the volume growth is around 20%, and against this 42% of rupees growth.
So the price appreciation accounts for 20 to 22% roughly.
Right.
Okay. Just one more last question. The FMCG plans that we have mentioned in the draft heading, so what geographies are we targeting? Because we've mentioned that we have open depots in the north and south.
So right now, yeah, there is a depot only in north and south. But right now, the expansion, everything will come up in the this Khalapur plant only, the Maharashtra only right now. So whatever we will cater, a new customer base will be in right now in the Maharashtra, Gujarat, and further going maybe we'll think over the expansion in further states.
Right. So roughly by the next 2 quarters or 4 quarters, or can you give me a timeline on that, please?
So actually, yeah, I you have right questions. So actually, next 2-3 quarters are really challenging for us to do many things like FPO, then the expansions and many things. So I think we will come back and exact data and details where we are coming up with the expansion plans and everything.
All right, perfect, sir. Thank you so much. Loved having to talk with you.
Thank you very much.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Rohit Suresh from Samatva Investments. Please go ahead.
Good afternoon, sir. Thank you for the opportunity and congratulations on a good set of numbers. So my first question was on the hospital furniture segment. Could you just briefly, highlight, the size of the market and who are our major competitors, and how do you see this segment contributing in the next year or so?
Okay. Basically, I'll ask your one of the question was what is your hospital growth, right?
So the market size basically, and who are our major competitors, and considering COVID has settled down, how do you see this segment contributing to your revenues in the next 1 to 2 years?
Yeah, I mean we see exact numbers. We are also not very clear in these things because we are the market size about. I'm not very clear with the figures right now, so I will not be able to comment on that right now. About as you said, like growth. I think you said about the second question was growth, right?
Yes, sir, growth.
Yeah, so I think constantly we are doing a growth in this, except this quarter because of I think we had a good contribution from the containers as well. So we have done this around 9.5% in the furniture parts. But rest, I think this will continue for 10 to 13% approximately in the furniture part, the same growth.
Got it. And sir, is this any major competitors for us, or is this market majorly unorganized sector?
So both the things. Answer is like right now what we know till date is we are competing with the market from China, Germany, and other countries who are supplying in. Yeah, so we have mostly our all imported. These all products are imported earlier.
Got it.
We know it here right now.
Got it. So on the FMCG part, like the other participants asked, what kind of products will be focusing? So in paints, will it be small containers, which are, I guess, more value added, or any particular segment within paints or lubricants that we are focusing on?
So we will start with all lubricants and FMCG initially, and yes, definitely. So our bottom line will be where we can get the good margins, definitely, as we are entering into this new market. But then obviously we look for a better margin only.
Got it. Sir, and on your working capital, in the RHP, you mentioned that for financial year 23, our working capital requirement is around 150 crores, and you'll be using 80 crores or something from the RHP to meet that demand, to cater to that working capital. So I want to know in future, so if considering we are expanding, going into FY24, FY25, and with working capital being a major, issue in the industry, how are you going to solve that problem once we put in more capacity and we grow at a much faster pace?
So, sir, currently we are going for the FPO. Majorly, we are looking for the high rate of growth in turnover this year. So for the next year, for FY24 and 25 also, we are expecting the same line of growth. So we may go for the bank loan and internal accruals for the same.
Okay. So you're confident that you'll be able to meet the working capital requirements, right? As from internal accruals, right?
As and when the company is growing, we will need definitely the working capital.
Okay.
Yeah.
Okay, fine. And last question on the capacity utilization, any number that you can indicate for FY23?
So for this quarter, we have 68% of capacity utilization.
And this should be the similar range for the entire year, right?
Yeah, we'll try to achieve at least 75% or plus.
Got it. Thank you so much, sir, and wishing you all the very best. Thank you.
Thank you very much.
Thank you. The next question is on the line of Nilesh Karani from Magnum Equity Broking Limited. Please go ahead.
Hi, sir. Hello. Hi, sir. Audible?
Yes, audible.
Yeah. Just to understand now, sir, the overall scenario, if we see, probably we spoke about like probably this 1 or 2 quarter might be little bit dampening or, sort of, because there are a lot of events happening over. So now if I want to, understand, FY24 would be in line, or FY23 would be in line with 22 one?
As a profit or as a
overall performance of the company.
We feel, like it will be better than this, and similarly 24 will be much better than this 23, because see, we will have a lot of when the FPO money will come and a lot of expense will be down, the interest cost will be reduced and many things will be reduced. So here we'll have a good numbers for sure.
So basically, see, just to understand, see, now the crude is settling down. No doubt it is still on a higher this thing. But then overall, if you see, so your volume growth and your crude raw material prices and all will be beneficial for you, correct, going forward?
Yes, I've understood.
Sorry to interrupt. Mr. Karani, may we request that you mute your line when you're not speaking? It's causing a lot of disturbance and we are not able to hear the speaker.
1 second.
Thank you, sir.
Okay. So what I've understood, basically, see, the crude price, raw material price is going to volatile with the world market. So whatever happens in the world, this is going to volatile. But yes, we are focusing on majorly in Indian market, and definitely we can see a big growth in near future. Near future means next 2 to 3 years. Yeah.
Okay. Thank you. That is from my side.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Yashwanti Kedkar, an individual investor. Please go ahead.
Hello, sir, and good afternoon.
Ma'am, you have to speak a little loud.
Ma'am, your audio is sounding very, very soft.
Am I audible now?
No, ma'am, it's still the same.
Am I audible now?
Yeah.
Yes.
Thank you.
Okay, so congratulations for very good set of numbers, sir. I just wanted to understand few things from your side. Like in last quarter, we were having a little headwinds coming from the logistic issue and the raw material. Raw material prices have started, I mean, the crude prices have started softening up. So we expect some good savings coming out from those areas. I just wanted to understand like how the logistic cost and the logistic issue has been Q1 has been seen, and whether they are sorted out or still more quarters to see.
Okay. Thanks, ma'am. Thank you for your questions. So yeah, I think what you are saying is that the logistic issue which we have said in the quarter 2 and quarter 3. So I think people have understood somewhere. I will not say the rates has come on softener or something like that. Well, people have understood this will be going to be a same rate, and they are continuing this business. I mean, like, this is what I can say right now. But so logistic issue what had was a price rise that time and abnormal prices. But availability of containers, yes, it is very smooth now.
Yeah, the main concern was only availability of the logistic and the containers. That is why we are not in a position to supply to our customers who are in terms of export outside.
Yeah.
So I believe that is sorted out now.
No, so the problem was our customer was not able to get the containers and not able to export there. So we are in the local, so maybe we are able to get those material to them. But they were not getting the containers on time, or maybe the price rise was so high that they were not able to export.
Yeah, because till last quarter we were listening from you that because they were not able to export, we have orders in hand, but we are not able to supply them. That is
yes, in some of the countries, yes.
That is the concern. Answer like how the prices are moving down as far as the crude is concerned. Do we see any benefits coming out of it?
Ma'am, I'm sorry. You need to speak little louder because some of the voice is not. I'm not able to hear that.
No, I was just checking with you. Like now, as the softening of the crude prices is happening, now it has come down to around 90 level. Would we be seeing some good impact on the operating margin? Because though we have expanded our EBITDA by around 28%, 23-28% odd, we just wanted to know that margin was not that great. I mean, the margin was very subdued. So just wanted to check on that.
Yeah. So whenever a price goes up, a price goes down. So there is somewhere it always affects. When it goes down very sharpen or goes down very sharpen up, so then somewhere some profit margins are going to affect some of the companies. Now it might happen either we have a stock or we don't have a zero stock. So it's going to happen because our 40% product, 40 or 50% product is imported. I mean raw material we are importing. So we have to keep some inventory. So that sometimes it hurts. Sometimes it hurts when the prices go sharply fall down.
Okay, sir. And now we are coming out of the FPO of around 125 crores, and the major object of the issue is to raise the working capital requirement, I mean to meet the working capital requirement. So what is our working capital cycles and debtors and inventory in terms of the days?
Yeah, Kashmira.
So you want to understand the number of days of inventories and receivables, ma'am?
Yes, basically how the working capital cycle is.
Working capital cycle. Yeah, I'll give you that. Just a minute. So ma'am, currently our gross operating cycle is around 77 days and net operating cycle is approximately 43 days.
Okay, and that is continue to remain same because as we are seeing there is likely increase in the working capital requirement.
And this will going to be increased. Our working capital cycle will increase because we are expecting a requirement of working capital with high growth in sales volume.
Okay.
Yeah.
Okay. And ma'am, there's a frequent change in terms of the management. So how would you like to address this issue?
Ma'am, can you be little louder?
Sorry, ma'am, we're not able to hear.
Your voice is very soft.
There is a change in the management personnel continuously. So how would you like to address this issue?
No, sorry, I didn't get you that.
So there is a continuous change in the management personnel.
Such as? I don't know. Where you're referring to which one?
There is a notice with regarding the new appointments.
Yeah, so new recruitment is on. So maybe on many new recruitments are coming up, and yes, we are making a good team, and so we are adding the people. That's what I can say.
Okay. And would you, and how among the two, I mean between the two, like packaging and hospital business segment, which one you look more lucrative for the current year, seeing the corona issue is almost over?
No, so I think the ratios will be remain the same, almost same, the percentage of vertical.
Okay.
So we see, but major growth will come from containers only, which is right 80% to 87% in that container segment, because we have already expanded in that line, and we are all our operation efficiencies also goes there, mainly because how we can produce more numbers.
Okay, sir. And with regard to the capacity utilization, as economies is back in the operation, the demand has been seeing a good spurt. Do we think that we can see some increase in the capacity utilization going forward?
Yes, definitely capacity utilization will be increased. Yeah, we are. You can see from last quarter to quarter, we are trying to increase that through operational efficiencies. We are trying to increase that the maximum numbers what we can achieve.
What we can expect by the end of the year, sir?
Sorry?
What we can expect by the end of the year for FY23, how much we can see the capacity utilization will be increased?
And we are expecting it will be between 70 to 80% nearly.
70%.
That is what our expectations is.
Yeah, that is a good jump from 60 to 65% now.
Yes.
Okay, sir. I think that's all from my side. In case of any question, I'll come back in the queue. Thank you so much,
Sure.
and wish you the best.
Thank you very much.
Thank you. The next question is from the line of Rohan Kamath from Finterest Capital. Please go ahead. Rohan, your line is in the talk mode. Please go ahead.
Hello. Are you audible?
Yes, sir. You're audible. Please go ahead.
Congratulations for the good setup of number. Sir, I want to know about the modest packaging. Sir, in the modest packaging segment, what is the pricing power we enjoy with our customers, sir?
Thank you very much for the question, but I really did not understand exact question.
In the modest packaging segment, what is the pricing power we enjoy with our customer?
You are talking about the percentage, quantity, or?
Yeah, sir. Well, percentage, sir.
It depends, we sometimes it's a 15 to 20% EBITDA level, depending on the customer, depending on the size, depending on the volume, and depending on the other things like printing and all these things. So it's all rates are dependent on the item wise.
Okay. Sir, is there any plan for buyback, sir, for the company share?
Right now, sir, not, because we are just coming up with the FPO, so there are no plans right now as of today.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is on the line of Rohit Suresh from Samatva Investments. Please go ahead.
Yeah, hi sir. Just one follow-up question. If you could just, you focused on operational efficiency. If you could just highlight, what steps the company has taken to, improve its efficiency over the past 1 or 2 years, and how, like, any steps, any areas that you're particularly focusing on. So if you could just highlight very briefly.
No, so we are implementing many systems on the production side, and wherever we can, change over mold changing, the color changing, and many other things. Small things also makes, that makes a lot of difference in operation efficiencies. So we are focusing more on that thing right now.
Got it. Thank you so much, sir. Thank you so much.
Thank you. Yeah.
Thank you. The next question is from the line of Bijo Dalvi, an investor. Please go ahead.
Hello. Thanks for the opportunity, sir. My question was that, like you said, in this quarter we have achieved 68% kind of capacity utilization. Is that right?
Yes, sir.
Yeah. So in Q4 FY22, how much was the capacity utilization?
Last quarter was 64%, sir.
64%. And for FY22 as a whole?
Fourth quarter of FY22 was 64%. Vis-a-vis this quarter, we have achieved 68%.
Yes, ma'am, but I am asking for the full year.
Full year is also approx 64, 63.97 approx, you can say.
Okay, got it. And one more thing, we have seen that some of the raw material prices that are cooling off from their lifetime high. So how this can impact your margin going forward? I mean, like, are we holding some kind of high cost inventory right now or not?
Sorry, I did not understand the question, sir. If you can just repeat the question, it will be better for me, sir. Thank you.
Yeah. So my question was that, our main raw material prices are coming down from their lifetime highs. So are you holding any kind of high cost inventory?
No, it's not. It's coming down. See, there are, I do not know you are referring to which prices, but SDP prices is just coming down in this quarter. It is just started from June month. So it has not come down so much drastically down. But still, like, say, the prices are still up, although crude prices are little bit softer. So the major corrections are yet to happen.
Okay. And if you could tell me the raw material inventory that we are holding in as on June 22, so that will be helpful.
So, sir, it is not that we are, holding the high raw material prices stock, because it is on an average, we add the stock on a, daily and weekly basis. So it is never that way that the high cost raw material prices we are holding.
And this is for local prices. But when it is coming to import, yes, we have to have at least 75 to 90 days inventory with us. So our 40 to 60% is import material, and the rest is local prices, local material, domestic.
Got it. And sir, we are a B2B player. So what is the time gap to pass on our high raw material cost or high input cost to our customers?
So it depends sometimes. So sometimes it takes around 1 month, sometimes it takes 1 quarter. So depends on the last third quarter when the prices has gone up drastically up. It took us to get some 2 to 2.5 months to get the rates from the customers, because there was many other costs also went up. So everybody's was to get the prices pass on was a little difficult from them.
Yes, understood, sir. And other thing is that like if I look at your revenue growth over last year, last 2 years, so that is indicating a way that our volume growth was not much, but our price growth was high. So that the growth in FY22 will be much of a price growth. Is that a right understanding, sir?
I'm sorry.
So, sir, for FY22 revenue growth was largely driven by the prices, not the volume. So is that right understanding?
Yeah, somewhere it is, yeah, because our volume growth was 20% and the volume growth is 42%. Yes. That's what I think your question is, right?
Yeah. Yes.
Yes.
Yeah. So, given this scenario,
prices increased drastically from Q3 and Q4, it is upward only. And even the Q1 also, somewhere, some of the months, the prices was up.
Yeah.
And now it started getting down. So, yeah. So volume growth is always there, yeah.
Yeah. But like in FY23, we are expecting volume growth kind of 20% kind of volume growth that we are expecting. So given that the prices are cooling off, so can we expect that the revenue growth for the full year basis on FY23 will be lower than the last year? Or is there any strategy that others are taking?
I got your question. So maybe, yeah. So the volume growth will be almost with a similar pace or maybe a little more on that. Because we are coming up with many new products, as you must have seen the prospectus. And also, yes, our operational efficiencies and increase the capacity also through operational efficiency. So I think we see a good growth in at least 23. Hello? I think he's...
the line for the current participant has dropped off.
Yeah,
Participants, in order to ask a question, you may please press star and 1. The next question is from the line of Sandeep Mane, an individual investor. Please go ahead.
Hi. Hello. Good afternoon.
Yes, good afternoon.
Sir, I have some questions.
Yeah.
So my first question is, sir, out of our product mix, which product category contributes highest to your revenue?
That is containers, so which is the packaging industry.
Okay. And sir, is there any plan on a new capital expenditure?
Yes. Not yet decided, but yes, definitely once we come up with the FPO and all, so we will definitely come up with something good.
Okay. Sir, my next question is, on margin front, can we get product category-wise margin breakup, or which category have a highest margin and which had a lowest margin?
So yeah, definitely see furniture industries and others where we have an infrastructure product and things. So we have a little more margin than the containers for sure. As okay. Containers are a little
okay.
Yeah.
More margin on containers.
Yes.
Yes. Okay, sir. My last question is, what majorly dips the margin in FY22 from 13.4 to 10.3? Can we expect margin to go north in coming year?
Are you talking about EBITDA level or what exactly you are talking? Sorry,
Yes, sir.
Sorry, sir. Can you just repeat your questions if you don't mind, please?
What majorly dips the margin in FY22 from 13.4 to 13.4 to 10.3? Can we expect margin to go north in upcoming year? It's a EBITDA level.
Okay. No, I think we wanted to maintain or we have a better margin than what we are presenting right now. So our major focus area is like, how to increase and how to maintain the profitability.
Okay. 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 Thank you, sir.
Thank you. The next question is from the line of Aditya Jain, an individual investor. Please go ahead.
Hi, sir. Out of the FPO...
Sorry to interrupt, Mr. Jain. Sir, your audio is sounding very, very soft.
Am I audible now?
A little better, sir. Please proceed.
Hi. Out of the FPO proceeds, how much capex are we envisaging?
So there is no, we haven't described any thing there. So once the major funds are going into capital requirement only, working capital requirement. So we haven't decided yet.
Yeah. So this will be for the sales, right? For the new product?
So there we have already, I think if you have read prospectus, that we have already will start very soon. So that we have, so one expansion is already there in the field, yeah.
Right. And this 126 crores of working capital requirement which you have envisaged, what would be the working capital days according to you?
Working capital cycle will be approximately for both of things is around more than 75 days.
75 days.
More than 75 days.
More than 75 days. Right. And with the existing capacity, right now we are at 68%, and you said we'll try to achieve 75% or higher. What could be the peak revenue we can achieve on this capacity? Earlier you said 345, 350 crores if I'm not wrong.
Same thing. As of today, same thing. Without any addition of the capacity, it will be the same.
Right. And once the raw material volatility subsides, we can do 15% margin, right? The normalized number, let's say, going forward in next year or so.
Sir, I'm like, nobody can predict on that volatility because, all over the world, there is something or the other thing going on. So, I mean, like, it's a very... Yeah, but definitely we wanted to keep the same margin. Let's see, or maybe...
I'm not asking for...
The thing is, we wanted to sustain the margin and we wanted to have a better things.
Yeah, I'm not asking for any guidance. I just want to understand, once it normalizes, whenever it happens, I know it's very uncertain right now, but whenever it happens, can we do 15% margin?
Of EBITDA?
Is it possible? Yes.
Obviously, see, our target is, like, my last 2-3 concalls I was saying is our target is always a 15%, 14 and 15% in between. So definitely we wanted to increase from, so I think we have increased from 10% to 11.12%. So maybe, we're going to increase that EBITDA margin. Yes, for sure.
Okay.
Immediate target is our maybe 14% plus.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Yashwanti Khedkar, an individual investor. Please go ahead. Yashwanti Khedkar, your line is in the talk mode. Please go ahead. Yashwanti, your line is in the talk mode. Please go ahead. As there's no response from the current participant, we'll move on to the next. That is on the line of Mitsu, an individual investor. Please go ahead.
No, sir. Sorry for the disturbance. My little line got disconnected earlier. So right now, sir, we are into B2B business. So any plan to move into the B2C business in near future? Or how you are, you are seeing your business maybe 5 years down the line?
Your audio is breaking up. We are not able to hear your question clearly.
You're breaking up and you just little bit away from your mobile, little bit. Not too much, but because they are too close to the mobile.
Yeah, so now it's better?
No, sir, it's still the same. Sir, we would request you to use your handset mode while speaking and not the speakerphone or the headset.
I am, using handset mode. So is this better now?
So a little better. Please proceed.
A little better. Yeah. Go ahead.
Yeah. So sir, my question was, like, right now we are in B2B business. So any plan to venturing into B2C business in a phased manner, maybe in 3 to 5 years period?
So, yeah, you're right. We are into B2B segment right now. Not any plans right now in B2C. As of today, no plans right now.
Okay. And like how you are, expecting the growth maybe over next 5 years or maybe in FY25, how you are expecting the growth will be coming?
So too much, but we haven't. I can't. So yes, definitely. The company is growing. You can see since last many years, companies have given a growth of more than 35%. So we wanted to at least remain the same thing, because if you do this way, you definitely will have a good numbers. So I think you can expect the same growth story in next some years.
Okay, got it. And sir, like given the plant that we have, total 3 plants that we have, so any possibility like we can expand our capacities by doing brownfield capex in our existing plants, and how much we can increase our capacities in the existing plant?
Yeah. So I think we have some of the capacity. We will in a Khalapur plant. So we might come up with the expansion there.
Okay. No, sir. Like I just wanted to understand. Like right now we have a capacities of 23,000 metric ton, roughly.
Right.
So given this, like we have 3 plants. So can we expect that this capacity we can increase to maybe 30,000 or 35,000 metric tons by doing the brownfield expansion, not the greenfield expansion?
No, see, any plastic industries has some limitations. So, like, whatever the capacity is, the maximum achievable is 80 or 85% out of the whatever the capacity we have given it. So yes, and we are trying to reach up to the maximum level within this year by or maybe make maximum next year. So we achieve that. With simultaneously, yes, we are going to expand some of the product line and some of the machinery also in the near future.
Okay. So there is no plan to do any kind of greenfield expansion in the near future, maybe 1 or 2 years period. So there is no plan to do a greenfield expansion plan. Is that right?
Really sorry, sir. I did not understand a single word of what question you asked last time.
Basically, not able to hear.
Yeah. So I just want to understand, like, so there is no plan to do any kind of greenfield expansion for maybe next 1 or 2 years period.
Which expansion, sir? Which expansion?
Greenfield expansion.
Greenfield expansion. Yeah. But right now, nothing as of today on a paper. So anything is coming up, we will definitely announce soon.
Okay. Got it, sir. Thank you. Thanks a lot.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Yaswanti Khedkar, an individual investor. Please go ahead.
Thanks for the once again for giving me the opportunity. So I just wanted to understand what is the contribution coming from our top 10 clients?
Top 10 clients is approximately giving 25% of the turnover, ma'am.
Top 10 contributing our 25%. Okay. And what is our client retention policy? Any threat towards the business?
So we have good policies about the clients because we have many clients who are there from so many years with us. So right now, I can say our 70% business coming from 88 customers.
Okay. Okay, sir. And how would you like? Yeah.
88 customers are like almost a repetitive customer from last many years.
Okay. Okay. So is there any threat or the new entry? Do we have any entry barriers as far as the business goes?
Good question and difficult question. You asked me very difficult question. So I can say yes and I can say no as well. So yes, because see there are many unorganized players also in this segment. And no, because nowadays many multinational companies required many facilities has to be with a well equipped, well planned with a fire extinguisher and all the systems in place. So it's very difficult for unorganized players. So your answers are yes and no both.
Okay. Okay, sir. And how would you cut our future growth driver?
Sorry?
What are our future growth drivers?
Future growth driver?
Yes.
So right now, future growth driver is like our packaging business only.
Okay.
Definitely, there is other segments are also there, but right now we are main focusing on packaging business and how we can do a lucrative business on that same thing. We are looking at the same.
Okay. Sir, I might have missed out, you might have said, but I just wanted to confirm, is the packaging contributing to around 60 to 70% of our total turnover or more than that?
More than 80%.
No, more than 80%.
More than 80. And how much coming from the hospital furniture?
So this quarter is coming around 9.5%.
9.5%. Okay. Okay. Is it because the demand has come down because of the corona? The demand has been high during the corona period because of the loss of requirement for the beds, and there was a lot of expansion happening at the hospital end too. So is it the right to expect that the contribution from the hospital business will be around 10 to 12% going forward also?
So I will say here, not exactly, because see, even in the Q4 also we have done very good numbers with the furniture parts. So it is, but this time, yes, container business was on a high growth. This thing. The furniture part remains the same with the 10 to 12%, which will be a common. See, whatever happens in the COVID time, it was like past stories now. So I think, yes, definitely we are seeing a good growth in furniture part as well.
Okay, sir. So now you say the business will be normalized and more will tinted towards the packaging.
Yes.
Okay, sir. Thank you so much for once again for giving me an opportunity and wish you the best.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1.
Sorry? Okay, sorry. Yeah.
Participants in the conference, if you wish to ask a question, you may please press star and 1. As there are no further questions, I now hand the conference over to Mr. Sumit Maru for his closing comments.
Yeah, thank you. Thanks everyone for joining the conference call of Mitsu Plast Limited. If you have any queries, you can write us on info@kirinadvisors.com. And one more, thank you everyone for joining the conference. Thank you.
Thank you very much. Thank you very much to the team.
Thank you, all of you.
Thank you. Ladies and gentlemen, on behalf of Kirin Advisors Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.
Okay.